What happens when one of the world's biggest investment firms teams up with one of the most aggressive tech giants in the East? You get a financial juggernaut that could make you rich or wreck you. This isn't just another mutual fund. This is Jio BlackRock, a $9 trillion force now tapping into the wallets of India's middle class. But should you invest? The answer isn't simple. And in the next 10 minutes, you'll understand why this shiny new opportunity may be either the best or worst decision you'll make this year. First, let's break it down. On one side, you have BlackRock, the world's largest asset manager, handling over $9 trillion in assets. On the other, Jio, a digital empire under Indian billionaire Mukesh Ambani, known for turning telecom into tech domination. Together, they've created Jio BlackRock, aiming to shake up India's $575 billion mutual fund industry. And they're promising something bold. World-class investing, made simple and digital first. Sound too slick? Yeah, it's kind of like saying, hey, we mixed Tesla's vision with Apple's branding and called it affordable. But jokes aside, this new fund is not just targeting Indian investors. Its long-term reach will impact global markets, digital finance, and possibly your portfolio. Let's dig deeper. Jio BlackRock is launching with a mission: democratize investing. Bring professional-grade tools to the average citizen. Sound good, right? But here's what they won't say in the ads. This fund is entering a market filled with retail FOMO, low financial literacy, and dangerous regulatory loopholes. And when the average person pours money into a big name without reading the fine print, history tells us what happens next. Think Robinhood during the meme stock craze. Think Terra Luna before it collapsed. So what's the actual product here? Jio BlackRock is expected to launch low-cost index funds, possibly mirroring US ETFs like BlackRock's iShares. If they stick to this model, that's a win, especially for passive investors. But if they pivot to actively managed funds, remember, more fees, more risk, and more marketing hype. And when you combine high retail optimism with minimal transparency, that's a recipe Wall Street calls smart money bait. Retail jumps in. Institutions pull out. Who loses? You guessed it. Look, I'm not saying Jio BlackRock is a scam. Far from it. In fact, the idea of merging Silicon Valley speed with Wall Street structure could reshape global investing. It might even set the stage for fractional ownership of Indian assets by US investors through ETFs or digital rails. But here's the kicker. The biggest risk isn't Jio. It's you. The urge to invest before you understand. The dopamine rush of seeing a shiny new fund and thinking, this is it. I'm in early. Because if history's any guide, big financial shifts don't just change portfolios. They change entire economies. And guess what? A similar shift is already happening in crypto. Ethereum is positioning itself to become the backbone of global finance, with price targets you won't believe. If you're serious about making your money work for you, then Jio BlackRock is just the opening act. Because next, we dive into how Ethereum might just take control of the entire financial future. The video is called Ethereum Takes Control of the Financial Future. $25,000? Jose Luis Cava explains. Hit that end screen. Stay sharp. Stay wealthy. I'll see you there.